Hi, in this video, let us see how the employee contribution made towards this welfare, staff welfare fund or any scheme is it taxable or exempted. Different types of welfare fund or scheme are Provident Fund, Superannuation Fund, a fund set up under the provision of Employee State Insurance Act, or other funds set up for the welfare of the employee. It is also important to note that in case if this income is not being taxable under the head of profit and gain of business or profession, then it has to be declared under the income from other sources. And also, when in case the employer has been making the payment of this employee's account in the relevant fund on or before the due date, then the deduction of equal amount is available. So it says that it's like if the employer is making their payment to the relevant funds within the due date, then that equivalent amount can be claimed as deduction by the employee. Let us see how this provident fund works and how is it being taxable or not taxable, or is it exempted under the uh, different types of provident funds. So we can see that there are four types of provident funds. That is statutory provident fund, which is mandate, which is to be done by the company once their an employee limits increases 20 members, and the recognized provident fund or unrecognized provident fund or public provident fund. So when it says that employer's contribution to the provident fund, if it is under statutory fund, then it is fully exempted. And in case of recognized, it says that up to the 12% of your salary, that is up to the 12% of your basic plus DA is exempted, and any amount in excess of that will be taxable. Under unrecognized provident fund, it is fully exempted. We don't have any limits in case of public provident fund because it says that you can invest up to 1.5 lakh in a year. And deductions under ATC, under statutory, whatever the amount you have been contributing towards your statutory provident fund, you will be eligible to claim that as an deduction under ATC. The same is with recognized provident fund also, but this is not applicable in terms of unrecognized provident fund. And public provident fund, you can claim whatever the amount you have been depositing towards the public provident fund. And how about the interest? Interest whichever has been credited, as the income is earned towards the statutory limit, so it is fully exempted. Even in case of unrecognized provident fund and public provident fund, it is fully exempted. But in case of recognized provident fund, it is exempted only up to the limit of 9.5%. So any interest amount received in excess of 9.5%, it shall be taxable. And how about the payment received at the time of retirement? At the time of retirement, the statutory provident fund, whatever the amount you're receiving, it is fully exempted. It is in case of recognized funds, it is fully exempted subject to certain conditions and circumstances. In case of unrecognized provident funds, it is fully taxable except the employee's contribution. And in case of public provident fund, it is completely exempted. Please note the provident fund calculation is always done on salary. Salary means it is basic plus DA. Okay, and the act also provides certain exemption in hands of employees in case if the employee is done a continuous service of 5 years or more, then whatever the income which is receiving, that will be exempted. And in case if he's been terminated because of certain reason, that is which could be beyond the control, maybe it could be a ill health, or it may be because the company is shut down the company, in that case he's allowed for the exemption. And also note that there is no exemption provided in excess amount of 2,50,000. So in case if anyone is depositing the amount towards the recognized or the statutory provident fund which is above the limit of 2,50,000, whatever the excess of 2,50,000 will be taxable in hands of employee. And in case if the amount has been deducted from the employees but the employer has failed to make the payment for that year, that amount will get accumulated for the next year. That is for next year, it is 5 lakh limit instead of 2,50,000, it will be 5 lakh limit. So any amount more than 5 lakh will be taxable, and below that is not taxable, it's exempted. Let us find this with an example. Mr. Alex has a PF balance of 5,50,000 including interest as on 31st March 2022. He works with a private company and he has contributed 3,50,000 into his PF account in financial year 22-23. Assuming the interest of 8.5% will be received on the contribution made, what will be the taxable amount? So let's bifurcate this into taxable contribution and non-taxable contribution. So the closing balance, that is, as on 31st March, the balance of LX was 5,50,000. So let's take the amount as it is, and we'll consider that as a non-taxable income as it is carried forward from the previous year. And the contribution done in the current year was 3,50,000. So as I mentioned in my earlier this thing, it says that up to 2,50,000 it is exempted. Any amount excess of 2,50,000 is taxable. So the under non-taxable contribution will be entering 2,50,000, and the under taxable contribution the balance 1,00,000 will be considered for taxable. And how about the interest? He's also received an interest of 8.5%. So whatever the amount of interest on 2,50,000, that is 2,50,000 to 8.5% is exempted, and on 1,00,000 whatever the interest of 8.5% is that will be taxable. So the total taxable non-taxable contribution is 8,21,250, wherein the taxable contribution is, which will be considered as income from other sources, would be 1,08,500.